The Nasdaq has been producing 17% returns annually since 2011. I mean, that's huge. While the S&P does 8%. So, I mean, Bitcoin's at 147%. So it's a whole different game. The whole space goes up a lot. I think
over 100.
Solana does maybe 10x from here, and Bitcoin does 5x or 4x from here. That kind of stuff. Typical bull market. And then there'll be, but yeah, I mean, I would just be growth orientated.
Raoul Pal shared an optimistic outlook on Solana, predicting a significant rise in its value, even as the cryptocurrency market cools off after a highly volatile week. He highlighted Solana's potential to outperform other major cryptocurrencies such as Bitcoin and Ethereum, citing recent technological advancements and market dynamics. Paul further revealed his personal strategy, revealing that he has allocated 90% of his cryptocurrency holdings to Solana, reflecting his confidence in its long-term prospects. Moving on to technical analysis, Paul presented charts illustrating Solana's price patterns, highlighting a perfect wedge formation known to signal bullish trends after periods of low volatility. He anticipates a significant growth phase, which could extend into early next year as altcoin season unfolds. Paul highlighted other fundamental factors that support an optimistic outlook. He highlighted Solana's adoption of NFT compression technology, which allows for scalable and cost-effective management of non-fungible tokens, NFTs. Despite a pullback that has kept its price mostly sideways since March, Solana has shown impressive resilience and has outperformed Bitcoin and Ethereum since last October. Although it pulled back after peaking at $208 in March, Solana has consistently held strong support levels around $128, reinforcing traders' optimism that the token's price could see a significant surge. According to Raoul Pal, Solana can do 10x more from the current price, which can lead to $1,000 or even $1,500 level. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Raoul Pal's view on Solana and the overall crypto market.
I think the opportunity here is the space is $2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. When I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
And I don't think that's wildly wrong. If Bitcoin's at $1 million, yeah, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. It doesn't matter. It's just gigantic. And the other part of this cycle is there's no secondary liquidity in crypto market. So what you get is all these early stage people, they dump the tokens, and then there's a few Asian trading shops, a few market makers, and a bunch of retail. But there's literally $10 billion of professional capital in crypto markets. From 2008, we had a global debt reset. Now, as opposed to letting go of all the debts, what they did was cut interest rates to zero and said nobody needs to pay interest rates. Okay, that was a huge advantage for the system, and everybody reset their debts for this 3 to 5 year sector. So then the debt refi cycle, when they have to refinance the interest payments and the debts, drive the business cycle. The business cycle's always been the credit cycle. So now it's become almost perfectly 4 years. The only other time in history it was perfect like this was back in the 50s and 60s. So there's financial repression going on, but it goes in this 4 year cycle. The 4 year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this, because there's not enough GDP growth to pay for it all. And so we go on to the next cycle.
He also predicted that the cryptocurrency market would explode in the coming years, leading to a market cap worth trillions. Paul gave a bold prediction, explaining that the cryptocurrency market would reach a market cap of $100 trillion. He explained the macroeconomic trends that shaped the global financial sector after the 2008 crisis. According to Paul, every bear cycle boosts tech stocks first because they help shape the future markets. He cited the fact that cryptocurrencies are based on technology, and the next recession will boost them to new highs after the recovery. The tech sector is the one that gains the most after a stock market crash. He explained that the cryptocurrency market is the first to benefit from a downturn because its technology is new and unexplored. He predicted that if the cryptocurrency market reaches a market cap of $2.5 trillion, the next stop will be $100 trillion. Paul backed his prediction using Metcalfe's law, which is driving unprecedented levels of adoption. The market will see massive adoption after the next downturn that will propel it to new heights. Chris Bernsk, former director of ARK Invest, also backed Raoul Pal's bold and optimistic predictions. Bernsk said that he would not dismiss Paul's observations because a $100 trillion market cap for cryptocurrencies is possible. Appearing on Market Disruptors, Paul noted that since 2008, major economies have synchronized their debt rollover cycles, creating a predictable four-year pattern aligned with the U.S. presidential cycle and the Bitcoin government halving cycle. This synchronization stems from central banks' efforts to prevent systemic collapse by continually depreciating currencies and rolling over debt. Paul estimates the depreciation of global currencies at around 8% annually, which he describes as paying for an 8% put option on the entire system, not collapsing. Paul sees Bitcoin as the most notable asset, while the S&P 500 is barely keeping pace with the depreciation of 12% annual returns. Bitcoin has averaged 150% annual gains since 2011. Once you look at it like that, it makes it easier, i.e., you just need to own the one asset that outperforms expectations. Paul estimates it will take about 6 years before artificial intelligence, AI, and robotics fundamentally reshape the economy in ways that cannot be understood. His advice is to make as much money as possible before this paradigm shift. Paul rejects predictions of an imminent stock market crash, saying central banks cannot allow it due to systemic risks. Instead, he predicts continued currency depreciation leading to asset inflation, with transformative technologies such as AI, robotics, and blockchain creating a renaissance of innovation and productivity gains. Paul shared his thoughts on the impact of the business cycle on various asset classes, including cryptocurrencies, highlighting the risks associated with trading altcoins outside the top 10. Current ISM levels suggest weak GDP growth for the fourth and first quarters, weighing on cyclical stocks, the Russell 2000 and commodities. Paul's leading indicator for the ISM has risen sharply, which typically benefits the S&P 500, a mix of cyclical and growth stocks. Growth assets like the NASDAQ and cryptocurrencies, which tend to bottom out early in the cycle, are poised to rally, extending his analysis through the end of 2025 using the Everything Code framework. Paul projected good economic growth throughout the business cycle. He highlighted the global liquidity, a crucial factor in this framework, is expected to increase, driving asset growth. He stressed the importance of investing in the fastest horses or secular trending assets during these times. He identified technology, particularly the exponential era and cryptocurrencies dubbed the supermassive black hole, as key areas to focus on. He noted that cryptocurrencies tend to outperform technology as the liquidity cycle turns positive. As altcoins begin to outperform Bitcoin for the remainder of the cycle, he warned that trading altcoins outside the top 10 is difficult and carries significant risks. He suggested that investors can reap greater gains by holding established cryptocurrencies like Bitcoin, Ethereum, and potentially Solana, or other proven projects with adoption.